Hello, everyone out there in podcast land. Welcome back to Adventure Capital, where we not only discuss the entrepreneurial journeys and adventures with founders who have raised capital on Wefunder, but also the different resource providers and mentors helping founders along the way. Huzzah! In this interview, we chat with Peter Swan, the CEO of Gust. Gust helps early stage startups with a bunch of the knottier questions that they encounter along their journey. Before we get on with the podcast, we're required to let everyone know that anything we say here should not be interpreted as investment advice, recommendations, or soliciting investments in any company. All companies raising on Wefunder are given an equal opportunity to participate in the podcast based on the progress of their campaign. Wefunder gang, take it away.
Hey guys, Jonny Price here on the Wefunder team. Welcome to another episode of Adventure Capital. Today, we're joined by Peter Swan from Gust. Peter, welcome to the podcast.
Thanks, Jonny. Great to be here.
Maybe you could start by just giving us the 1 minute high level on what you guys do at Gust.
Yeah, so Gust is in the unique position, or maybe not so unique, of being a startup that helps other startups. We bill ourselves as the best place to start, run, and fund a venture. So we help companies do everything from incorporate and manage early legal and equity to sourcing resources based on data that they've given us, think like AWS credits and things like that, to finding the right accelerator to apply to finding the right angel group to apply to after that. And then all in between, we provide education to help founders kind of level set, better understand the venture ecosystem and the startup fundraising trajectory, and really just get a better understanding of the nuts and bolts of what goes into a startup.
And what stage of startups do you work with? I know you're working with companies from incorporation, but is there a point where it's like, okay, you kind of graduated from Gust, or are you continuing to work with companies for many, many years?
So we continue to work with them for quite a bit of time. And, we start at the idea stage. If you have an idea and you're really not sure whether it's a venture fundable idea or if it's venture adjacent, we can help you figure that out for free. And if you decide that it is venture fundable and you start along that startup path, we can help you connect with some resources to extend your runway. And then once you realize that, yes, this is something I'm going to pursue, we can help you turn it into a Delaware C Corp. We can help you keep your legal managed so you don't run into all those crazy funding roadblocks that really shouldn't be roadblocks just because you didn't know what you're doing. Once you close that, we can help you keep your cap table up to date for years to come, help you navigate different fundraising instruments, model funding rounds, understand economic and control dilution, all of that wonderful stuff that you don't really have time to think about because you're busy changing the world and building a product. We help fill in those gaps.
Love that. And we'll come back to talk more about that. But before we get to that, we'd love to just hear a little bit about your personal background and your journey at Gust.
Sure. So I joined Gust, I guess, over 8 years now, which is a crazy time span for a startup employee. I tend to be somebody who locks in and digs into an opportunity as long as it continues to provide me growth, which Gust absolutely has. So I didn't find out about startups probably until like 2006, and met up with a friend. He introduced me to the concept of working at a startup. I went and worked at a startup called Endorse Music. That was a music-based startup, overlapped with one of my passions, which is music, live performance, and all that.
And you're in Nashville. You live in Nashville. We're down the road from each other today, Music City. Are you from Nashville? Was that like?
I am not. So I grew up on the East Coast, and most recently, prior to Nashville, spent a little over a decade in New York City, in Brooklyn, and moved there with a bunch of musicians, and was active in the music scene in New York, and that's kind of how I fell into my first startup, and then fell in love with working at a place where your role and your set of responsibilities can kind of expand to whatever you're interested in and wherever you can provide value. And that was kind of fascinating to me. I got to learn on the fly. And I started, very much focused on software engineering. So when I left that opportunity, I was looking to find kind of a bigger team, and I interviewed at Gust, and the notion of a startup that worked with startups was fascinating to me. And even the stuff I'm talking about now, as a person who was very technical and was very put off and intimidated by all of the other stuff that would go into taking a technical project and turning into an actual business. It's like, oh, I can be a part of helping to solve that for people. That's perfect. So I started there as a software engineer.
In 2014.
Yes.
Give or take.
Maybe 2013. It's hard to remember now. But I started as a software engineer. At that point in time, Gust had contracted Pivotal Labs to help them replatform. I really enjoyed working with those folks. They really kind of were a big part in my developing my own development and software engineering philosophies and all that stuff.
That's cool. When I worked at Kiva.org, we had an office in Soma, and above us was the Pivotal Labs or a Pivotal Labs office.
Awesome.
And then had a friend of mine who left Kiva to go work for them.
Yeah, I entertained that notion a couple of times in my career.
Yeah, it seemed like a really great company.
Yeah, very cool. And they really helped us set the engineering culture at Gust. And we, built out our engineering team there. And as I continued to work, I realized that, the most interesting problems facing us right now are no longer engineering focused, they're product focused. So I started to kind of toe that line and see if I could provide value there. And eventually I became head of product and worked through that for a while. And then a couple of years ago, the current CEO of Gust decided that the job wasn't right for him anymore and asked if I wanted to take it over. And that's when I became the CEO of a company, which is something that I had never really pictured myself doing. And yeah, here we are 2 years later. That's
awesome. What have you learned? I'm curious about the kind of, leadership lessons or psychology lessons of what have you learned about being a CEO that maybe before you were the CEO, you didn't appreciate, and now you're like, I was kind of mean to our CEO when I was the head of product, but now I'm sitting on the other side of the desk. It's like, okay, yeah, I get it now. What are the biggest lessons?
I think just the sheer number of responsibilities and threads that you need to keep track of. When you're an individual contributor or even at higher level management, you're generally responsible for, a function, a project, or coordination of some kind of well-bounded thing. And when you're the CEO, you're responsible for, managing the vision of this thing, communicating it both externally and then back internally. And that vision really has to permeate everything. So just the number of things that you have to keep track of, I've had to really, really work on my own personal organization and time management to figure all this out. And that's not even to mention all the business operations functions that you now are tangential to and have to have an eye on.
Really? So that's kind of interesting. I don't know, how old you are. I'm too polite to ask, but you're not in your early 20s. I would venture to guess. And you told me that you started working in startups in 2006. So that's kind of late when you say you've almost reinvented or learned all these lessons about kind of time management and stuff. That's kind of scary to be learning those lessons so late in your career. What are some of the key kind of lessons there around time management or?
Well, I think time management is really different when you have to manage multiple functions. Mm-hmm. So as an engineer, time management is relatively easy. Well, not easy, but it's a different set of things, right? There are processes like Scrum and Agile that generally organizations fit into, and there's a specific cadence of meetings, but those are your meetings, and that's it.
Right.
Yeah, maybe you have some all hands, right? But you know where those sit. And then the rest of your calendar is clear for individual contribution and heads down deep work.
And goodbye to individual contribution time as a CEO. Yeah.
Right. So and everybody is responsible for defending that time. Everybody above you, it's their function to make sure you get your work done and are unencumbered. So everybody is defensive of your calendar and
whereas
your
as
time.
a CEO, everyone is attacking your calendar.
Exactly. So
they're on the offensive.
I'm not trying to lay this out like I was a terrible time manager before, but the activity of time management and time blocking and calendar defense is so much different when you're at like the public facing edge of the company and when you're kind of at the top of the chain for all of the internal pieces as well.
Well, I'm 39 and I still haven't learned my lessons in this front. So
there's always new lessons, right?
We'll go for a beer someday soon.
Now. Right.
We'll go for a beer someday soon, and you can give me some more ideas. There's a PG, I think it's PGSA of the make a schedule versus manage a schedule, and like I would imagine, being an engineer and like having like a whole day is like doing individual contribution. Is it like kind of frustrating sometimes, or it's like now my calendar is absolutely slammed with the CEO meetings, and it's like, oh, I wish I like. Sometimes I feel like the grass is always greener, right? Like, do you kind of long for the serenity and peace of a calendar that allows you more time to think deeply and execute on stuff?
Oh, some days, but I think that's part of it. And, as a CEO, your individual contribution is making time for thought, right? You have to sit back and digest everything and then be able to communicate it effectively. So you still have to block off that time for deep work and individual contribution. And that was something that was actually tough for me to learn at first too. Like, oh, that's my main role now. Right. For a while, I didn't think of that as something that needed deep work or the type of concentration and time dedication that my previous individual contribution did. So I didn't defend for it. And learning that I had to defend for that. And certainly there are times when I want to just go write some code or build some cool product. That stuff fulfills me at like a very basic level.
For me,
but I've also gotten to do so much other stuff.
It sounds super geeky, but for me, the equivalent of you writing code is building Excel models. So I started my career in consulting, did 6 years in consulting, and really good at building Excel models, and you like doing stuff that you're good at. So if I just like lose myself for building Excel model for 20 minutes, I'm like super happy. This like the trade-off between like individual contribution and like management and leadership is one that I've wrestled with a lot over the last year. A year ago, I kind of stepped back from like individual contribution to kind of manage and lead the team, but I think I stepped back too much. And so now this year I've tried to step back into just like being on calls all day long, like hustling hard, and try to set that example for the team. But it's like, how do you strike that balance? It's really, really tough. But it's fascinating. That's a really, really cool career arc. It's been great to get to know you over the last year or so being here in Nashville, since we went to grab lunch at Mass Tacos. I want to dig a little bit deeper into Gust. So you gave us the high level overview before, but maybe you could go into a little bit more detail on the different product offerings. And one question from what you said earlier, kind of curious, like when you say you help startup founders like figure out incorporation and figure out like how to raise capital, like how hands-on are you? Is that like, to what extent is it kind of product and self-service versus people in the Gust team are like jumping on phone calls to really understand the intricacies and nuances of every single customer you have?
Yeah, so it's a little bit of both, but I'll start at a high level. We can dig a little deeper. So at the front door of Gust.com, and I'll focus on entrepreneurs here because that's by far our biggest audience and what our public-facing product, or who our public-facing product typically serves. When you come to Gust, your first experience there will be going through kind of a survey style set of questions that will give us just an initial idea of where you are. And one of the things that we do a lot is try to break down a complex topic into individual kind of buckets of information that each have like a nice piece of output for you. So we'll ask some questions about your team composition, and then we'll stop and we'll tell you like, okay, this is what a typically funded startup team composition looks like. Here's where you're good. Here's where you might have to have a conversation about where you are. What's an
example of that? Like, hey, you're trying to build a tech startup and you don't have any engineers, kind of thing?
Exactly. But I think more often in like a highly regulated industry is the best example, right? Like, okay, you're going to do something that requires, USDA approval. but you don't have
Got
anybody
it.
on your advisory board that has the type of experience to help you navigate that. And that
Got it. So
doesn't
this is
mean like you
including
can't get
like,
funded, but it might mean that, hey, maybe there's an incubator or an accelerator on your way that will
right.
really help you kick the tires on this and, fill out your team so it's something that's fundable at the level that most of the funders are on our platform.
That's cool. That's a really awesome use case, actually. It's a very tangible like example of how, yeah, with like actually you don't need to be on a call with someone for an hour to figure that out, right? It's like based on some inputs and a basic algorithm. It's like, yeah, you probably need some kind of industry domain expertise here for the USDA approval. That's a great example.
And yeah, so once we have that information, we have a lot of power in terms of how to direct you. And if we can pinpoint that, yeah, you're at a great spot to consider, a late stage accelerator or an early stage angel, that helps us direct you then to the people on the platform that might be good relationships to make. And then by collecting that data, we also have a really nice kind of vetting mechanism that allows us to form partnerships with places like AWS, places like Wefunder, financial service providers who are like, hey, we've done some upfront diligence on this company. So yeah, they might not have revenue yet. They might not be attached to some high profile accelerator, but they're doing the work. Here's where they land. Here's the sheet that you can look at. Like, let them have access to your startup program and let them progress through it. So with AWS, for example, we've had a lot of success. They've pulled back their startup partnership program at different points over the last few years. And we've been able to continue to escalate the number of credits that we get because we have such good data about the companies. So that's kind of the Gust fundraising platform as a whole. And we have a few different kind of survey style tools that will help you with different outputs. One will just let you know where you are on the fundraising spectrum, like what you might be able to raise and from whom. One will help you with some of the same information, understand collaboratively with your co-founders what your initial equity split might look like based on their prior experience, what they're bringing to the table, what roles and responsibilities they're going to take on. And this is another great one because a lot of times founders will come in and just be like, oh, obviously we'll do a 50-50 split. And then they'll lock that in. And then 6 months down the line, expectations weren't met because they were never discussed. Right. And somebody's leaving and there's debt equity and like all of this crazy stuff happens and it's a headache and the company explodes. So we try to give you some value up front, like, hey, you should have the co-founder conversation anyway, because talking about these roles and responsibilities is really important to form that bond. But also at the end, we'll let you know like a ballpark of what your equity split might look like based on that.
Do you remember, have you listened to that? I think it was a Gimlet podcast called Startup. Do you know that one?
I don't.
And there's this guy, Alex Bloomberg, I want to say, and it's definitely a podcast series about like starting a startup. And I remember one of the episodes, it was like him getting in this contentious debate with his co-founder about the equity split and how, he had this expectation and his co-founder had this other expectation. And he is like a masterful podcaster. And so just like told this story in like such a gripping way. But yeah.
Well, I love Reply All, so I should probably check that out.
Yes. Yeah. Great podcast.
I feel kind of shamed right now that I don't know about it.
You actually should. I mean, for what you guys do at Gust, you should like listen to it as a company. That's like absolutely. Team bonding, like instead of book club, podcast club. But I mean, on that note, like I always like talking about mistakes. Like, what are some of like the most common or the most like egregious? I guess that would be a fun question. But like some common mistakes that founders make when they're incorporating, when they're just kind of starting out on their journey.
Yeah, the co-founder equity split one is a huge one. And I think just understanding equity in general is...
So on the co-founder split, it's like, you just don't put enough thoughts into it. You just kind of rush to 50-50 or a third without understanding actually this founder's like expertise is more valuable, or this founder is going to take more of a lead role, or kind of this founder is way more committed.
Yeah, like this person expects to work full time for the next year on this, and this person doesn't, but they never talked about it. So it serves like a whole bunch of functions. right? Because not having that conversations about roles and responsibilities is huge. Because if you don't set expectations, it's very easy to violate them. And that's a huge one. And then, if you do
sounds a lot like my marriage, actually.
right. But it is a relationship like a marriage. Like it is a
Yeah.
relationship that is going to go through a lot of difficulties. It's going to be stress tested. So being open about what those expectations are and how the relationship is going to function is super important. And a lot of folks don't understand at the beginning either that splitting 50-50 also has company governance implications.
Yeah.
Right?
You want one person to have the casting vote.
Yeah. So like there has to be a way to disagree and commit for the most part. So, when we help people incorporate through Gust Launch, we send them through a stock planning tool that helps them kind of figure this stuff out. And, yes, before in terms of software-based and hands-on support, we have kind of a 3-tiered strategy there. So if you're going through this stuff and you go through kind of our survey type or our product UX and you still have questions, you get a first stop of like an intercom chat with one of our customer support team. We like to think of that as a translation layer. A lot of founders come in and they have like a loosely formed question that might not have all the terminology right. It might span across legal, fundraising strategy, and tax. And the first thing we try to do is just kind of help them form what that question is. And then from there, we can say, okay, this is the question or the questions that you have. Here are the avenues for getting that answered. One might be us, like come to our biweekly office hours where you can ask this question with other founders. We can all learn from each other and you get some face-to-face time with the people who run this company. Or like, hey, this is a situation where you absolutely need to go talk to an attorney. And, our purview is that every startup is going to need an attorney. There's enough nuance in the law, in fundraising negotiation, in strategy that you will need an attorney. So we actually keep a bunch of them in a network for Gust Launch customers. And when people escalate to the point where they actually have a strategic legal need, we refer them in. So you don't have to bring your own lawyer. We have a set of vetted firms who are wonderful. We match based on like industry and location. We give you a few options and we help you actually find legal representation that is startup focused. And that's another common mistake we see is that people will find legal representation that is not startup specific or doesn't have startup specific experience. And there are a lot of weird, confusing things in and around startup fundraising and startup law that aren't recognizable to the larger legal profession at first blush. And you don't want to get into a situation where your legal counsel is like fighting back against an investor because they don't understand what a safe or convertible note is, or they don't understand what level of diligence is expected at a particular round. That is not a good situation to get in. Or even if they steer you, who is trying to raise venture capital to form an LLC, like all of these things are avoidable mistakes. And finding help that is startup focused is really important.
And on the financing side, I mean, you guys are helping founders with that as well. Like, in what ways? What are the kind of different service offerings you have where you're helping founders on the capital journey?
So we also have a cap table management platform that kind of underpins the Gust Launch experience. So with that, we help people kind of model different fundraising scenarios and understand like, okay, this is our co-founder ownership. What does it look like to raise via safes or convertible notes? And what does my dilution look like afterwards at a preferred round when all of those things convert?
And are you also helping them figure out like, okay, for your business model, like for your kind of various inputs, whatever it is, TAM, team, traction, etc., all the T's, we would recommend that you do like an equity contract, or we would recommend a safe, or we would recommend, that you kind of actually go the revenue share based route versus equity because your startup is maybe on a more linear path. Are you kind of helping them figure out like the right investment structure and capital path for them as well?
So what we can do is limited, right? Because we are not ourselves lawyers. So what we can really do is educate about the options and let people know like what qualities point in these directions. But that's absolutely something that we're able to do. Just educate, like typically for a company that is on a venture path, this is an instrument that would be used at this stage, help people understand what the terms are and how it actually impacts both their ownership and financial upside in the future.
And on the subject of fundraising, we've talked about this new community round concept that we kind of rolled out and launched as a kind of brand and a name a couple of weeks ago. And I know you're kind of enthusiastic about it. Say more on your thoughts, maybe some of the pros and cons of opening up part of your capital, your round as you grow to your customers and community, as well as angels and VCs.
Well, yeah, I think there are really cool things kind of at all stages. I think at the absolute earliest stages, I think one of the issues that we've seen around starting a company for people who don't have a current network of high net worth individuals is that initial founder contribution, which is generally expected to be between somewhere between 10 and 30K, maybe up to like 50 to 70K when you loop in friends and family. There's just a gap in getting that funding. Right. So we're really excited about the idea of turning a friends and family round into a community round and allowing people who aren't necessarily accredited to come in and invest early and actually be on the cap table and benefit from the outsized upside that this company might actually have.
One SPV on the cap table will point out.
One line item on the cap table with
one line on the cap table,
but management.
I love that. Like I always say that is for me, like if you're doing a friends and family round, why not do it on Wefunder? It's like it's one line on the cap table. It's clear what everyone's getting. It's administratively simple. It's like kind of you can publicly promote it. You can raise from unaccredited investors. You can get in front of Wefunder investors. There's so many ways. I think the one downside for me is you pay us a fee. So there's that as a trade-off that founders should need to consider. But like, I don't know, I'm biased. I think we're worth it. I
think you have to understand too that there's a cost to raising capital, whichever regulatory avenue you choose. Right. So
there's a cost in your time, right?
Yeah, there's a cost in time, and there's typically legal costs as well.
Right.
Now, if you're going to go do like a traditional accredited friends and family raise, that legal cost is relatively streamlined because you're probably going to go do a 506B, right? But now if you start thinking about general solicitation or inclusion of unaccredited investors, now you're starting to open up a much larger can of worms with much higher associated legal costs. So I think if you're going to do an early round that includes unaccredited investors, from a cost standpoint, even with the fees that a Reg CF or a community offering is at least an interesting thing to consider. And I think what's really cool about it too is that certainly when we talk about friends and family, right, it's typically not just friends and family. It's people in your kind of startup community orbit who you can convince that you are a worthy bet, who are excited about your idea. And when you think about that notion, I think it overlaps very much with what you all are wanting to do with the idea of a community round. Really, it's already a community round. It's just a portion of your community are the only people who can participate in it in a meaningful way. So I think that's great. And I think what that also means too is if you can convince people in a bit of a larger community to start, and that community overlaps with your customers, that is a great signal for the next semi-professional investors who might come in and augment that. And if you can get that ball rolling at an early stage, I think there's some really great signaling that can happen that can help you actually prove traction to other early stage investors, actually get some semi-professional investors involved, keep that ball rolling, and then keep your community involved as well. And I think as you get bigger and bigger, the stuff that we've seen with Mercury Bank, for example, was really exciting. Like it's great. Their customers understand what they're doing and they want to be on the cap table and they want to be investors in the company. And like, what a great way to just enable like a win-win. Like you get more capital to make the product better. Your users win because the product gets better and they get to participate in the upside of the company.
delight your customers, let them invest in your startup. Yeah, I love that because, the community rounds website is featuring the Mercuries and the Replets and the Levels and the Rome researchers of this world, the kind of, companies that raised the 120 million Series B from Andreessen, and then opened up a small allocation to their customers. But yeah, for me, and this is part of Wefunder's mission as well, which is to get more startups started, get more capital flow into startups, let more founders throughout the country, throughout the world take their shot. For me, that starts at the very earliest, first money in, supercharging a friends and family round. And then every round, we would love it. Every round, you just open up a allocation to your customers and community to invest alongside the VCs. So yeah, I love that we're kind of working together on the top of the funnel, kind of early stage startups as well as later stage. Where's Gust heading? Where do you see the future going for you guys? Is there either on the product roadmap or the growth side?
Yeah, sure. So we're really trying to stitch together kind of a distributed startup acceleration ecosystem. Our thesis is that, at the beginning, founders aren't really well incentivized to keep track of their data in a structured way. Mm-hmm. And there's no reason that they shouldn't be. So we try to stitch that into a Gust company profile that immediately starts providing value. At first through education, so that you can build traction and build signal in a positive way. And then at every stage after that, whether it's extending your runway with discounts, getting in front of the right investors, making sure that you have your diligence docs all checked before you walk into that meeting, removing all of those roadblocks. So we really think starting with data early on and helping you build a continuous kind of company data room as you grow and allowing you to mobilize that data to keep your startup alive and growing is really strong. And we're excited to try to build that kind of bottoms up.
Really love that. That's cool. This has been a really fun conversation. Couple of questions to end that we ask everyone. Firstly, one company that you would want to see launch a community around on Wefunder so that you can invest in them yourself?
Yeah, such a tough question. I think for me, there's definitely a class of companies in my mind that I want to see. But if I had to pick one, I think we've even talked about this in the past, it would be Bearded Iris Brewery. It is by far the best IPA I think I've ever had.
Gotta love that homestyle IPA.
And as somebody who wasn't a huge IPA fan before, it really kind of changed my tune. And I think, Death and Company allowed some kind of retail investors a while back to invest in what they were doing. And I think there's a really cool model for traditional breweries and really for businesses that, have always been kind of brick and mortar single location. I think there's a lot of opportunities if they can fund from the people who are already invested in them as a product to kind of change the growth trajectory of those types of businesses.
100%. I love that. Okay, well, maybe we start a petition for Bearded Iris. We get it to go viral here in Nashville. They open up a piece of their ownership to their fans.
We should probably just go meet at their brewery and talk to them directly.
That's true. We should just go around the brewery with a clipboard, a digital clipboard, getting people to sign up and petition them, and then we can present it to them. Have you seen that petitions feature we have on communityround.com?
I haven't, no.
It's a communityround.com. And so communityround.com/SpaceX is a petition where I think it's up to 450 people have pledged, hey, we'll invest a few $1 million in SpaceX if Elon opens it up to let us do it. So let's get one of those going for Bearded Iris. Last question. You could probably talk for half an hour on this last question alone, given all the startups you've worked with and all the mistakes you've seen them make. But one piece of advice for startup founders or CEOs.
Oof. This is another really tough one, but I think from everything I've learned, the best piece of advice that I can give is try to build up a community around you of other people who are building businesses, not just products, not just apps, but businesses, actually doing the startup thing. I think more than anything, kind of expanding your network of good people who are not playing a zero-sum startup game, and just increasing that surface area for serendipity is huge. Like the more people know what you're doing, the more people who are excited about what you're doing, the more people you're helping, the more opportunities you're going to have, because a lot of the startup game is still luck right now. So the more you can really kind of build that network of people who are interested in both you and what you're doing, I think the better.
I love that, man. That is a great piece of advice. One day I want to make like a blog or something with all the different pieces of advice that podcast guests have given. But that's a really awesome one. And this has been a really fun conversation. Look forward to doing more and more to collaborate between Wefunder and Gust over the coming months and years, and we'll get a homestyle IPA in the Bearded Iris tap room sometime soon, and hopefully by that time they'll be live on Wefunder, and we can have a cheeky pint and then write them a check.
Yeah, it'll be perfect.
Cheers, Peter. Speak soon, man.
Thanks, John.
Bye.
Bye.
Thank you for tuning into another episode of Adventure Capital. I hope you laughed, took notes, shed a tear, and most importantly, feel ready to go off on your own adventure. And remember, whenever you're ready, Wefunder's here to help. Be sure to like and leave a review, gang.